Hello, my name's Eric Mancini. I'm the Director of Investment Research and a Wealth Advisor at Tripagan CPAs and Wealth Advisors. Today we're going to be talking about the 2020 U.S. elections happening in just 2 weeks from today. So we're going through the different topics. We're going to look at, just as a review, 2020 year-to-date market performance from January 1st through today. October 20th. Then we're going to look at the current electoral map, and we're going to look at the percentage chances of the presidential winner along with the makeup of Congress. And we're going to go to a prediction website, which is basically a website similar to the stock market where people make predictions using their own money. So it tends to be more predictive and fairly free of bias. And that's what we look at. Not as a definitive tool, obviously, but as one of the tools we use in terms of managing the portfolios and looking at potential scenarios for the election. We're going to go then into three general scenarios, our outcomes of the election and how we view each in terms of policy. Then we're going to go digging a little more deeply and looking at under one of those scenarios where a material policy change is likely, and that will be under a Democratic sweep of both the presidency and Congress. Then we'll dig further and look at different sectors and industries within the markets, and with the Democratic sweep, assuming that happens, how they will be positively or negatively impacted, and if there's some opportunities there within portfolios. And then lastly, we'll look at historical data of how the stock market has reacted in the past in election years, and then also after the election, depending on if there's a Republican, a Democrat, or whatever the makeup after the election is. So we'll start with your 2020 year-to-date global stock market performance. And in prior webinars, we've seen variations of this. And I'm not going to spend too much on this other than to say, at the very beginning of the year, extremely volatile, historically volatile, 35% bear market in March, that bonded in March due to the market realizing COVID-19 certainly would be a problem. And then really ever since then, it's been a generally increasing market, different stages of it, where from the very tail end of March through, say, the early mid-June, still pretty high volatility, low confidence in the recovery. Nobody really believed it, but that's when it went up the most. Then from most of the summer, really, June, July, August, volatility, although still elevated, came down lower and lower and lower. More people garnered confidence in the stock market, and we saw a general increase in participation in retail investors coming back into the stock market. And then more recently, over the past month or so, we've had a correction, about a 10% correction in the stock market, a move back up, a little move back down, and again, a return to higher volatility. And some of that obviously has to do with the election and stimulus talks that are ongoing as we speak. So on to the election. So this is from predictit.com, and anybody's free to go to this website, and it updates continuously, 24/7. And again, this is people actually putting money down onto who they think the president will be, the winner of each state in the Electoral college. You really dig down as much as you want in here. We view this as one of the more predictive and reasonable sources for forecasting the election, due to the fact that if you're putting your own money down on something, it tends to bring bias out of it. So with that being said, it is still anybody's race, although certainly it seems like Biden has the advantage. Really, for Trump to win, he would have to pick up North Carolina and Florida, along with all the other states that are leaning towards him, in addition to Arizona, and then one of the states of either Pennsylvania, Wisconsin, or Michigan. So that would be really his pathway. And then if he loses any one of those states, it would be very tough for him to win. So right now, roughly speaking, mid-60s for Biden percent chance of winning, and about 40% or so for Trump. So it's still anybody's game. In 2016, just to give you an idea, it was about 85% for Hillary, 15 for Trump. So certainly anything could still happen. But we do think it is leaning towards a Biden presidential victory. More importantly, or as importantly, is the makeup of Congress after the election. And here's the different combinations between the House and the Senate. And right now, the most likely outcome is a Democratic House and a Democratic Senate. So that would be Democrats retaining the House and taking over the Senate by at least one seat majority. And as of now, that's about a 62% chance of happening. And, if Biden does become president and we get the Democrats taking the House and the Senate, that would be the blue sweep or the blue wave or whatever you want to call it. And that is the scenario where policies would likely change. And we'll get into that in a second. So to summarize, when we look at the election, it's really three distinct outcomes. One, if Trump's reelected with split Congress or a democratically controlled Congress, very little major policy change, but still probably some stimulus passes after the election. So there we would see pretty limited impact on the markets, maybe positive short-term impact on the markets. If Biden wins the presidency, but you still have the Republicans maintain the Senate, there might be some slight policy change, but no increase in taxes expected, no significant tax policy of really any sort. It would really be concentrated on executive orders, maybe less aggressive China trade and foreign relation policy, and still some sort of stimulus likely passes. And that would be, again, probably limited stock market impact, maybe slightly positive. 3 is really the one where we want to concentrate. So if Biden wins and the Democratic sweep the Congress, then significant policy changes are likely over the next 1 to 3 years. And then if 1 and 2 really are non-events for the most part, so we'll concentrate on scenario 3, and that is this slide. So the way we've looked at this is really look at the major policies that Biden has proposed if he were to be elected, and Congress would certainly, we think, go along with it if it's controlled by the Democrats. First one is, and arguably the most important or the most impactful, is increase in corporate income tax rate from 21 to 28, along with a corporate AMT tax, which is tougher to dig into. But either way, with both of these or either one of those enacted, especially the 21 to 28% tax rate increase, that would have a significant negative impact, certainly for the U.S. stock market and most likely for the economy, at least in the short term and possibly longer term. There's really not too much debate on that. And this is regardless if you think it's positive or negative or the right thing to do or the wrong thing to do. You just have to look at the data and see how it will impact corporate earnings. Certainly that will significantly decrease after-tax corporate earnings or S&P earnings. The next one is increase in personal income and investment tax rates for high earners. This probably in the shorter term would be a moderate negative for the stock market as higher, wealthier individuals look to possibly take gains on purpose to avoid future higher tax rates, and also just basically selling in general for fear across the board of future higher tax rates on investment income. Over the longer term, we don't think this is as impactful, but both of those together on the personal side and the corporate side would be a negative for stock market and the economy. Then you move into other areas where it's either neutral or positive. So 1.3 trillion planned infrastructure plan is proposed by Biden, along with support for renewable energy. Especially the infrastructure would be a positive for the U.S. stock market, most likely, especially industrials and companies in that industry, along with, of course, renewable energy. And, that's a job creator, so that would certainly be a positive. Increased spending on healthcare, expansion of Obamacare. It's unclear, neutral to us what that would do. Too many variables really to look at. Yes, more people insured is better in terms of insurance companies for the most part. They'll make more money with more people insured. But if there's higher regulation, if there's price controls on pharmaceuticals, That would be a negative. So net on net, it is neutral or unclear how that would really affect the economy or stock market. Less aggressive trade, foreign policy with China and other countries. This is either neutral or maybe a slight positive, especially in the short term for U.S. stock market and the economy. Stock market likes good relations and no trade wars, and we think Biden would be somewhat less aggressive than Trump on that front. And then lastly, if the Dems get complete control, they would be more likely, we would think, to pass a larger stimulus or relief bill in terms of COVID. And that would be, especially in the shorter term, again, a moderate positive for the U.S. stock market and economy. So even if we do get the blue wave and we get significant policy changes, these things take, time as well, 1 to 3 years, some of them negative, some of them positive. We think in the short term, you certainly could get volatility and maybe a knee-jerk reaction of a 5 or 10% correction in the stock market on a blue sweep. But, that being said, if that does happen, it would be more of maybe a buying opportunity looking forward, where really, if these policies go into effect, it's sort of a mixed bag of positive and negatives. And then if you go deeper and say, okay, what specific industries or sectors, would be impacted here the most? Mega cap technology, as we speak, a lawsuit was just brought against Google for monopoly powers by the government, and we think that might be accelerated under a democratically controlled government. So we think that would be a negative, especially increased regulation if it changes the actual business models of Google or Apple, Facebook, Amazon, companies like that. Corporate breakups actually might not be that bad of a thing, but overall the increased scrutiny, increased regulation on mega cap technology, certainly a negative. Renewable energy, ESG, very positive. This is probably the one sector that would be the most benefited by a blue wave. We've already seen that in the stock markets. The stocks in this industry or these industries doing very well already, and that would probably continue for years as subsidies, spending on clean energy would likely go up significantly. Fossil fuels, interestingly or unclear, it could be a slight negative, especially for growth in the industry. But if regulation goes up significantly, they limit future supply, they limit future pipelines or drilling, that could actually boost prices for oil and natural gas, which would help current incumbent energy companies by limiting future supply. So, and that could help, what companies are getting through now. So it's unclear, maybe a slight negative, maybe a knee-jerk reaction further down for traditional dirty energy companies. But then that might present also a buying opportunity where oil could go up, for years afterwards. Infrastructure industrials, probably a positive with the 1.3 trillion in infrastructure proposed. Pharmaceuticals, maybe a slight negative or unclear, given likely increased regulation, maybe price controls. But again, if there's more people being insured, more people getting pharmaceuticals, that could be a counterbalance. Probably a positive to healthcare insurers. If more people are insured, all else being equal, that's probably a slight positive, despite maybe some regulation there as well. Financials, most likely a negative. They've been hit hard already this year, and this would be yet another negative to them if Democrats controlled all of government. Traditionally, they've been more negative on that sector, and we don't think that would change now. And then, interestingly, tobacco industry and cannabis industry probably be a pretty large positive, especially for the cannabis industry, although that's still very small. But if it somehow became nationally legal, tobacco industry would certainly probably get into that business pretty quickly and could really benefit that industry, which has been struggling for a very long time with tobacco, cancer, and reduced volumes of smokers. This would certainly be a boost to that because they are in a position, Philip Morris, Altria, to really, they have the distribution, they have the know-how, they could sort of transition pretty quickly. So that might be an odd, but a positive if we have a Dem sweep. And, within our portfolios, we've done some movement already within these sectors, and it's likely we might make some more, especially within the renewable energy or ESG space. Healthcare already been active, and then we'll see if there's other opportunities through time. And then, as we wrap up here, we'll look at what historically the markets have done in an election year. So this is looking back to 1928, every single election year. So this would be this year, 2020. And, really it's been pretty good. So no matter what, no matter what the parties are, no matter who wins, no matter what the makeup of Congress is, average return in an election year has been 11.1%. Only 17% down years and 83% up years. So really elections turn out to be somewhat non-events in terms of the election year. Now 2020 is almost over, and looking forward is obviously the more important thing. So we go to this slide, and this slide I find very useful in saying, okay, this is looking at the zero there is when a president's term begins. So that's month 0. And then going through time, those are months on the bottom. So 6 months in, 12, 18, 24, etc. And it gives basically every combination of, Republican president, Republican sweep, Republicans have the presidency and the Congress, Democratic president, divided sweep. So it goes through every single combination that you could get in terms of president and Congress. And the big thing to get out of this chart is it really doesn't matter much. So you could have any combination you want, but if you give it a full, 3-4 years of a presidential term, regardless of outcome, it's very little difference and really just noise where, it's looking, stocks go up over the long term. So, we're getting a lot of questions, understandably so, a lot of concern about the election on both sides. But really, no matter what the outcome, 3 to 4 years from now, it is likely that it just doesn't matter too much, and stocks will continue to do what they do, and their returns will be based off of earnings, not who wins the election. And I think that's the most important thing is, regardless of the ultimate winner or congressional makeup, you should not let this change your portfolio, risk allocation, long-term retirement plans. At best, this might be a short-term blip on the radar here, and then we continue on to bigger and better things. And that's, that's our outlook on the election at this time, only 2 weeks away. We also have some additional information, the latest quarterly newsletter on the election as well. And of course, if you have any additional questions on the election or anything else, feel free to email me at eric@tfgllc.com. Thanks a lot. Take care.